everyone, it is Evan here from the Trade Risk on Friday, April 26th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So a busy week of earnings is in the books now, and the markets responded favorably right across the board. We made gains in all of the major indices, and the S&P 500 and the NASDAQ Composite broke out this week to new all-time highs. So let's take a look here at what went on, new all-time closing highs, that is. So if we look here at our market technicals dashboard, you can see on Friday we had a good day of gains right across the board. 5-day change numbers, 3 out of the 4 major indices in green territory and 3 out of the 4 in strongly green territory. It was just the Dow Jones that lagged a bit this week. And when we look at the major indices across all of our simple moving averages, we can see that we are above all of them. If we scroll down and take a look at what actually performed in terms of sectors, it was really, last week's pain is this week's gain. We saw a flip-flop in basically the underperformers from last week in the major markets and in sectors. We look at healthcare and biotech, for instance. Those were the beaten-up sectors that saw some big distribution and some breakdowns last week. They were the biggest rebounds this week, 3.42% and plus 2.55% for biotech. Utilities also moving from the bottom of the performance grid to the upper end, rounding out number 3 spot here. And on the downside, we now have energy, we have materials, and we have industrials rounding out the bottom 3. And for the first time in a little while, we actually do have a fairly even split here on sectors that are actually in negative territory over the past week versus those that are in positive territory. The skew is still a bit to the upside here, but we haven't seen a nice kind of split here in quite a while. When we look at some of the major markets, we have volatility, which got a 5% rotation into it. Of course, those are coming from quite low levels, but a 5% pop in the VIX, followed by natural gas, which has been really being sort of decimated over the past couple of weeks. And then we have SPY rounding out the top 3. On the downside, we have China, we have oil, which had been, of course, helping fuel this rally to the upside, finally getting some air coming out of that, and we have emerging markets rounding out the bottom 3. So let's jump into the charts here. Let's take a look at where we are, where we've come from. This is the S&P 500. This is where we like to start our analysis each and every week, and this is the cash market. And when we look here at the S&P 500, you can see we did get a new closing all-time high for the S&P 500. We technically haven't taken out the intraday high around 2941, but we did get a new all-time closing high, and that rounds out the, I believe, 4 months. Let's see, about 17 weeks, 3.94, almost 4 months, and about a, near 25 or a little over 25% rally from the depths of the fourth quarter despair here in 2018 all the way to these new highs. Took us 4 months, 25% rally, pretty much as close to a straight line as one could imagine. And here we are closing at all-time highs. Now, what we want to see at this point now is whether the market accepts these new highs. We want to see, of course, this weekly closing high is great to see. Now we want to see a follow-through week, or we want to see a follow-up week where we're actually holding above these prior highs. The big question here is going to be, does this turn into, or is this still some type of sideways range that has developed here with approximately 2940 as the top end of the range, and then down here around, call it 2,500, 2,400, is this just effectively a sideways range that the market is going to consolidate in for the next, several quarters or months or years or whatever it, ends up being? Or is this more like a breakout? Is this going to turn into just a total breakout, a total, eclipse of this prior pivot up here back from the fall of 2018, and then it turns into more of a 2017 moment where the market starts to enter this nice, sweet kind of trending phase and continues this move to new all-time highs? Or do we abruptly fail here and see price rejection and kind of come back down into all of the trading that we've been in since, not quite, we are certainly above January of 2018 levels, but, we've certainly been in this range now for, call it a year or so, trading around these levels in the S&P 500, and it's going to be interesting to see how the market follows this up, and whether or not we can actually get some distance and start clearing to new trending highs here. The MACD is still very supportive of this rally. In other words, we have price making new highs along with our momentum oscillator up here. That is always a constructive sign when you have momentum continuing to advance with price action, and so far no change there. We are still seeing constructive action in both cases. Now, certainly, as we know, the market's had a tremendous run, 4 months, 25%. Doesn't happen all that often that we see that type of vertical movement. So of course, pullbacks here, stuttering here, probably not that unreasonable to expect. But I think the bottom line is, as we've been rallying here, we've been kind of looking at these prior all-time highs as a magnet for the market to retest. We're getting it this week, and now we want to see how the market kind of follows this up. When we go to the S&P 500 daily chart and we look at things a little bit closer here, we did kind of pull back a bit on Wednesday and Thursday, but then we came right back and closed right here at highs on Friday. So we did, quickly advance to new highs earlier in the week on Tuesday. Wednesday, Thursday chopped. Friday, a strong session. So as it stands on the daily chart here, really, price has sort of been taking its time over the past week or so. It hasn't been a straight vertical line up like the weekly chart looks like. And we are, just kind of moving sideways, breaking out, inching higher, moving sideways, inching out, breaking higher. And that is a pretty constructive pattern for the S&P 500. As volatility remains subdued, you kind of get into those sweet trending phases where the market, with very little intraday volatility and smaller ranges, just grinds to new all-time highs, and it's doing it throughout reporting earnings, or it's doing it throughout earnings season right now, which is, all in all, a fairly constructive sign as of right now. So what I'm looking for on this daily chart, or what would have my attention, is just any abrupt change of character here. So we talked about in the S&P 500 how it's closing at new all-time highs. What you basically are looking for now, or what you want to be on alert of, is any abrupt sort of move that would look something like this candle right here back from March 22nd. If we saw some fast rejection in range, some change of character, high volume reversal, if we saw something here that basically indicates that, maybe sellers are returning back here at the top end of this range, maybe this is a value spot to sell, that's what we'd want to be paying attention to. At this point, it does seem like the less likely scenario, given the fact that we still have momentum and trends all pointing higher, but we don't want to rule it out as a possibility, or as a possible path that the market takes. So going forward, 286, that's approximately, let me switch over to the SPY chart, 2941, that is the intraday high that we still, I guess, in theory want to clear above and start closing above. 2872, that's still the area on the downside where upper level support is in my book. So 2872, that's where we want to see the market hold above to keep it acting as strong and pent up as possible in the short term. And then 2941, that's what we'd like to see taken out next week, and just basically price acceptance at new highs. Now, I think the most interesting index here is the IWM right now. I think this is the spot where we really do want to be paying attention to. So we want price acceptance in the S&P 500 if you're bullish, and for the Russell 2000 here, this is at a critical kind of inflection point here. This is banging up against resistance, coming in right around this 158 to 159 area. It has not broken out yet, and I think what the path it takes here will certainly dictate a lot of what goes on in just the broad markets, generally speaking, as well. Can we get rotation and a breakout and another leg higher here in the overall equity markets if the Russell can start to break out above this range? I do think it's a pretty important spot here, and a failure here could be equally as sort of detrimental to the bull case rally. If we saw an abrupt failure here in the Russell 2000 and it fails to clear above these multi-month highs, then that would certainly, to certainly expect that to weigh on the S&P 500 and even the NASDAQ 100, and just, broadly speaking, if the Russell cannot break out and start clearing above this range. It looks pent up. It closed this week near highs. I will say, intra-week here, especially on Wednesday and Thursday, we did see a little bit of sluggish action in market internals and some of the sluggish behavior in small cap participation. It did recover some of that ground on Friday, and if we do get a nice follow-through day, a breakout day on Monday, then that can all quickly resolve itself and start playing a very bullish tune here if the Russell 2000 can start clearing above this 159 zone. So for me, I'm looking at this area as really the battleground for the market now, and as a potential fuel or catalyst or leg higher for this bull market. If we are going to see small caps start to perform here, this is where we're going to want to see them do it. So Russell 2000s, pay attention to that 159 area. And if we go to the NASDAQ 100, this really has just run away with it. This helped fuel the market higher this week. We had a lot of large cap or mega cap companies reporting earnings very well. Generally speaking, all doing quite well or something. No real big surprises on the downside. So the NASDAQ 100 is getting a little vertical here, is running away, is extended, but the momentum is there, the trend is there, and bulls are just continuing to run away with this at new all-time closing highs. So that is the wrap up there, I think, on the market environment as a whole. We got another big week of earnings coming up, so let's not rule out the impact that could have on the market. But so far, after this busy week, markets are liking what they've seen. IWM, I think, is the most interesting spot right now, but bulls have control of this market. If we go to TLT next, TLT also had a nice week this week, 0.74% rally, breaking above last week's highs, trying to break this little pullback that it's been in for the past several weeks here. We talked about this as being an important inflection area as this retested the prior highs. We did get involved in this long once again for a long trade in TLT. Getting involved in it on Thursday. This was a trade that we were in back here. I don't have the exact dates, but we did play this breakout back on the end of March here, and we did end up, selling, had a successful trade, selling into strength and exiting, I think, the rest on this day right here as this started to break back down. And basically, we stepped aside to watch to see how this reaction would take place, and now we are back involved in this for a long trade, and we'll see if this can continue its momentum here, its trend back to the upside. Looking at that this past week's lows around 122 as the rough line in the sand here, but TLT trying to retest and successfully hold the top end of this range, the breakout area, and we'll see if it can continue in the coming days and weeks. We do have a long position there. So that is those are bonds. Let's take a look at oil, which did reverse this week, did it on heavy volume. Friday, the selling came in. This had a really, sort of terrific run here over the past couple of weeks. It had gotten vertical. We had been making notes of that. There's lots of ways you could sort of draw the trend line that extends here from recent lows. But if we just look at this as a general trend line here, we're right back into this trend of support here. It'll be interesting to see if this can actually hold. Certainly a pullback of a bigger magnitude would not be, totally unreasonable or even outright tremendously bearish, given the fact that it has covered from the lows to recent highs here about 50% rally coming from under or around $9 all the way up to $14, nearly $14. That's almost a 50% rally off of the lows in crude. So if we saw a 10, 15, even 20% pullback, it would not be the most unreasonable thing in the world. Your question would be, is that a higher low? Is that a pullback you want to be an owner of, or do you think this is a bigger trend reversal that would continue in the direction of this big impulse leg to the downside we saw in the fourth quarter? That's something you would have to have some type of thesis on there as this starts to pull back. But right now we're just looking to see if this can start to stabilize. Right now, sellers in control in the short term. If we go to natural gas, we saw a little bit of a flip here, and this has been certainly beaten up. No news, should not be new news to any of us here that has been following along in our analysis and videos. This, though, has put in an interesting kind of one or 2 day pop here. There's still a tremendous amount of technical damage, so it's tough to hang your hat on too much here. If you're a short-term active trader, there's opportunity, but you know, to say that this is looking any more like beyond a dead cat bounce at this point is just you know, is a tough position to have. Sellers still dominate the overall trend here to the downside, and you know, I think natural gas can certainly get a rally even all the way up to $24, but it's going to have to prove that it can sustain those higher prices for a longer time to give us any confidence that this trend has been sort of reversed. Looking at metals last here, we'll look at GLD and silver, and there is some interesting development here because gold, remember, broke down above year-to-date support, this multi-month support in here around 121, and now it's reclaimed it. It is back above it, and if we look at this weekly chart here, it did close near the highs, 0.83% higher. So this is an interesting save here by the gold bulls. We're going to want to see if they can follow this up and hold back above this support level for a couple of days. And silver's basically in the same situation, back above that $14 area. So maybe that breakdown did not, you know, is not happening, is not going to bring us lower for the foreseeable future. Maybe that was some type of bear trap to the downside. So we are going to need to see how gold and silver sort of follow things up and react in the coming week. Now, last but not least, let's take a look at sectors. Let's take a look at what helped move this market. We know from the top of the video it was healthcare, biotech on the top end. And when we look here at the weekly chart, you can see here that it did recover a good amount of last week's range. It is still an inside week that got printed here, but it is certainly a save here for healthcare to say that, you know, it's not entirely rolling over. Maybe this is not entirely a new, ugly kind of downdraft that is coming for the space. Maybe there is, you know, maybe this was just a very intense sort of rug pull and kind of stop, run, and shake out here for healthcare. And we're going to want to see if they can hold these prices up in the coming weeks, follow it up strong, and just maintain those prices. And biotech IBB is back to the support area here that held all year long. It broke down below it, and now it's starting to, you know, challenge and potentially get back above it. So, you know, for me, I'd still look at 107 and a quarter is basically the line in the sand here, and the more and you know, the longer we can spend back above it now, I got to say that this looks, you know, perhaps exaggerated or overdone. Certainly in hindsight, that's you know, what we, you know, we can only look at what the information we have given to us. But as the new information came out, as new price came out, and we saw a recovery here and not price acceptance down here, we got to change our analysis and say, look, maybe this is some type of false breakdown, and maybe this is going to be a nice trap here to launch us back into the range. It's something we want to pay attention to heading into next week. Last but not least, on the upside is utilities. Utilities here finding support around $57, coming back to the top end of the range. Still, you know, looking like it's kind of consolidating just under its highs here, so looking quite strong on the longer term time frame. XLU here, either sideways for a little bit longer, or whether or not it can start to go off of this move, it still looks pretty good overall from the big picture. Now, on the downside, we have semiconductors. Semiconductors has basically just launched higher to the moon here over the past couple of weeks, really got accelerated and frothy to new all-time highs. A little bit of a pullback this week. It came on heavy volume, so it was kind of an abrupt pullback here. So we have to measure and keep an eye on this to see if this is a change of trend, if this is something more meaningful, or you know, is this just kind of a another shakeout, higher low kind of pullback. We could draw a channel here of which it's been rising over the past couple of weeks, and look at this as kind of coming back and resetting itself to the lower end of this channel. To me, overall, bulls still have control here. A little bit of shakeout does not seem unreasonable. XLE, on the other hand, is giving up kind of a more or a tougher spot here. This has been, reluctantly sort of grinding higher here as oil has been charging higher. This has given up the progress from recent weeks, kind of falling back into this sideways range. So XLE I consider a little more vulnerable. If it starts breaking below $65, I think it's going to be in a tough spot. So I'd be careful there for XLE. Want to pay attention to that next week. Last but not least, we have materials. Materials here kind of checking back to this breakout area. Remember, this was one of the quality sort of rotational candidates here that we saw back at the beginning of April. It broke out above that $56 area. It is checking back now to that level right now, and it does look like potentially a constructive kind of pullback here. Multi-month breakout, pulling back now and retesting that 56. That's the level I'd want to see it hold, and we'll see if it can continue to do that into next week. So that is it. That is the full recap for this week. Thanks so much as always for tuning in and watching. You can subscribe on our YouTube channel or follow us on the Trade Risk, thetraderisk.com/blog. Have a great weekend, and we'll talk to you in the next video update.